Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FAIRtax guys. And again, we're sitting in our fancy virtual studio where you can't see the cube or you can't see the scrolling banner.
That's right. It's high tech, though. It's pretty high tech.
I guess we have to make trade-offs in some. We may go back to the old format just a time or two, just so we can
show off our.
We can show off our props. But
welcome to the program, everybody. Another edition underway here, and a great interview to start things off. But are you at any point in today's show going to get into Congress.gov at all?
No, not today. We're going to go ahead and let our AFFT President Steve Hayes talk with a gentleman named Alex Baltziger from a place called the Carolina Journal. Now, I am familiar with the Winston-Salem Journal, the morning newspaper up there, but not so much with the Carolina Journal. Are you? Do you know what that?
It's a statewide program. It's a state. They do video and they have an online presence that they discuss issues around the state of North Carolina.
Okay. Well, I said we're going back in time a little bit here, a few weeks. This interview was done just prior to the North Carolina Republican Convention that the FAIRtax guys and a few others were there at. And of course, Steve was there as well. And he got to talk to a lot of people. If you didn't see that show, go back to the archives of FAIRtax Power Radio and pick that up. But yes, we want to roll this interview that Steve did with the Carolina Journal. And we'll just go ahead and roll that now and comment on it here when they get done.
Welcome to Issues and Insiders. I'm Alex Baltziger with the Carolina Journal, and today we've got with us Steve Hayes with the Americans for Fair Taxation. I guess my first question for you, Steve, is who is Steve Hayes, and what is Americans for Fair Taxation?
Well, I'm an attorney. I will confess that I started off being a tax attorney. I quit doing that in the late 80s when I became convinced that it was a total travesty to have an income tax the way it was being applied in the United States, and I changed to different areas of law. But I'm recovering tax attorney is why I introduced myself, because you cannot escape the fact that in any area of life in the United States, the income tax will affect it, often adversely. And so you have to be prepared to deal with that. So no one can ever truly not be doing tax law if you're doing business law. But I avoid it as much as I can.
Can you explain in more detail how the Fair Tax Plan works and maybe how it would address some of the frustrations and complexities in our current tax system?
Well, first of all, what we've got right now is an income payroll tax system that's based upon production. The more you make, the more tax you pay. You invest the money, you pay tax on the investments. So we basically punish the things that we tell our kids they should do. Work hard, save money. That's the basic plan we have today. That funds the federal government, along with the estate and gift tax, but those are very minor. And what we're talking about is going to a tax that totally eliminates the income tax and the payroll tax and funds it through a consumption tax, a retail sales tax at the federal level. It's similar to the retail sales tax you have in 45 states in North Carolina, but it's at the federal level. So you get all of your paycheck because you no longer have withholding for payroll taxes or income tax. And then you take the money and you go out, and when you make new retail services purchases, like going and get a haircut, or retail goods, like you go to a department store, you go to Walmart, those are all going to be subject to a federal sales tax. And it's a 23% rate. It's called inclusive. That means for every dollar you spend, 23 cents is going to the tax, 77 cents going to the purchase of the product. Just like in Europe, or the value-added tax is included in the price you pay. What we decided to do, though, was to levy it exclusively, just like the state sales tax. So instead of it being 23%, it's 30% of the price you pay at retail for new retail goods and retail services. And that's really all it is. That's the fair tax. There's one additional part that we put in, which is called a prebate, which allows spending up to the poverty level for a family of four, that's approximately $40,000, to be without any tax. Contrasted with the present system where the $40,000 family earnings is going to pay minimally a payroll tax of 7.65%. Under the fair tax, it's zero. Under the present system, it's 7.65%. And then anything you buy that's new above the poverty level for every family in America is going to be subject to the fair tax.
Can you explain what you're talking about with the bill there? How did that get introduced? I believe it's House Resolution 25 right now.
Yes. John Linder in 1998 introduced the bill. It's been reintroduced every term. And because of the Freedom Caucus and the holding McCarthy's feet to the fire, he had to agree to let it come to a vote. It's not something that many in D.C. want, because they like the idea that the income tax is like their own ATM machine. They can say, we're looking at changing the rules on this industry, and they get flooded with contributions from that industry. And so they don't like to give that up. It's also a lot of control, because they can reward their friends and punish their enemies by changing the way things are treated. And so they don't want to give it up. But the main reason that it's opposed in D.C., I'm convinced, is because today, Alex, if you and I were to sit down and try to calculate how much tax you really pay, you would say, well, I have this payroll tax, I have this in income tax. And I'd say, okay, and you'd look at me and go, what do you mean, and? What about the other taxes you pay that are included in the goods and services you buy that you don't see? They're the amount of money that the corporation had to mark up the price to cover all the cost of government from everybody that provided that product to them for the final consumption. That's all going to raise the tax you pay. So when you see a 30% tax on every invoice, you start to realize what the real cost of government is.
Right.
And I think by seeing that, you're then going to have an ability to demand something change, because not just a few people, but every single person in America is a consumer. Everybody's going to see that every day, in some cases multiple times a day. So you're going to transfer power from the government to the people, because I get my whole paycheck. I then decide how much tax I pay by how much I spend.
So this sounds like a little bit more of a conservative idea. Now, is this supported by any Democrats in Washington or only Republicans? And if there are only Republican supporters, about how many Republicans are supporting this?
We've had as many as 70 co-sponsors. We're at 27 now. We've got a lot of people who are starting to look at it, but it's interesting because we're going to have a vote now. And so people are going to have to say, I want to support this, which incidentally gets rid of the IRS, because you don't need those people to collect. You get rid of all the forms. So I'm going to support keeping the present system, which means all of the forms have to be filled out. You have to deal with the IRS. You don't get your whole paycheck. Or I'm going to support a system where you get your whole paycheck, there's no IRS, it's collected by the states, just like they collect the state sales tax. It's simple. You don't spend your weekend before tax time trying to figure out how much tax you owe. You simply pay your tax when you go. And so you've got not almost, all of them are Republican. When Nancy Pelosi was Speaker, we had some Democrats who said that they would be stripped of their committee assignments if they supported this bill. But we believe there's going to be a lot of people looking at it very hard. I mean, Bobby Kennedy, Robert Kennedy Jr., I was talking to him before he decided to run about this, and he was very receptive because he believes in empowering people, not government, and not having your life controlled by bureaucrats, because that's what's happening now. You know, it's somebody, oftentimes nameless, who's telling you, Alex, how much money you have to pay in tax, whereas under the fair tax, you're telling them how much you're going to pay by how much you spend.
Have there been any other countries or localities that have implemented something like this where they just only tax consumption?
Well, if you look at some of the biggest economies in the world, Texas and Florida, they don't have an income tax. They rely on a sales tax. You look at Tennessee, rapidly expanding economy. They got rid of their income tax. As far as countries, no, nobody has put it in the same way. But Europe relies more and more on their consumption tax, a value-added tax, and less on their income tax because it's collectible, much more so than the income tax. And here, you've got a situation where the income tax is being evaded over $1 trillion a year, according to the IRS. And what that means is people who should pay that $1 trillion are not paying it. And the IRS isn't collecting it. And they got these 87,000 new agents. And the Peterson Foundation looked at it and said, at best, they're going to collect of the $10 trillion over the next 10 years, assuming it stays the same, $100 billion. So we're going to go through all this aggravation, all this additional cost to collect 0.1% of what's being evaded. Right. It's nuts.
Very interesting. So how much, you're talking about a lot of savings in terms of government costs by not having the IRS,
right,
by not having all these forms that taxpayers have to fill out. About how much savings would that be? Do you have any idea?
It's different numbers have been brought out, but $500 to $700 billion a year, it's estimated. Now, part of that's allocating the value to your time. In other words, you sitting over here doing these returns, there's a certain value to your time. So it's not all just direct cash, but a huge amount of money is spent trying to comply. And basically, you are the tax collector for the federal government if you're an employer. Every company collects for the federal government, for their employees, and remits it to the government.
Well, let's tie this into North Carolina. Who are some of your North Carolina supporters?
Well, Congresswoman Fox is a big one, and we've had others who've retired, and we're expecting to get some more as we go along.
And you'll be attending the convention coming up this weekend.
Going to be attending. We're going to be meeting with a lot of different people who are interested. And it's also interesting, I think, because North Carolina is very much aware, from what I've been reading, that the income tax being reduced helps the economy. The fair tax is now up for consideration in Alabama, in Georgia, and in Nebraska as a state-level tax, which would get rid of their income tax. It would bring all of their sales tax under one umbrella, treat everything uniformly, and allow a prebate, effectively, a credit for lower-income people to make it balanced. So you take a situation that is stifling your economy to some extent when you're competing with states that don't have an income tax, and you make it into an economy that's got the best of everything going for it, because now you've got a progressive tax system.
And our state legislature has a plan right now to eventually reduce the income tax to 2.5%.
Right.
Now, what do you think about that? Do you like that? Is that a good
it's
first
better
step?
It's better than what you would have had with a higher rate, but it's not good compared to zero.
Right.
And that's what you're talking about if you do this. You're talking about, again, the same principles of rewarding production, eliminating the bookkeeping entirely. Concentrate not on trying to game the tax system like a lot of businesses have to, but concentrate on making a better product.
Right.
Wouldn't that be a concept?
Right. Well, Steve, thank you very much for joining us here with the Carolina Journal. This is Steve Hayes with the Americans for Fair Taxation. Thank you very much for joining us today,
Alex,
Steve.
thank you for having me. I've enjoyed it.
All right. Okay. Quite
Nice.
the thing that struck me, I mean, right out of the box, is that you've got, of course, Steve was a tax attorney. And when you've got a tax attorney calling the income tax system a total travesty, the way it is administered and applied to the American people, a tax attorney who was making his living dealing with the tax system decided that this thing is just a monstrosity that needs to go. That can't be overstated.
And the significance of that was again, that was his vocation and he got to the point where it was too much. And then he went on in the interview regarding that particular line of the conversation. He told the interviewer that he, as a business attorney, after he sort of shed the focus on the tax measures and the tax attorney work, that he was still having to deal with taxes of the he was consulting.
Yeah, the tax system has got its tentacles into just about anything and everything in American life, especially if you own a business. But just individuals, I mean, you're always dealing with the tax system. You're getting, withholding taken out of your paycheck. You're getting, federal payroll taxes taken out of your paycheck. So you are dealing with the tax system on almost a daily basis, no matter what you're doing here. And again, for a tax attorney to decide that this was just a travesty is a tremendously powerful argument, in my opinion, for getting rid of the income tax and replacing it with a fair tax. And of course, unfortunately, not all tax professionals or tax attorneys feel that way. Next week, let me plug something here on FAIRtax Power Radio. We're going to go through an article that was written. I don't know if this guy's an attorney or not, but he is a tax professional who makes a really good living off the complexity of the current income tax system. He wrote a piece on Fox Business that we're going to dig into next week here on FAIRtax Power Radio. But there are some tax attorneys like Steve, who now says he's a recovering tax attorney, that see the truth and realize just what a total travesty the income tax system is and why it needs to be replaced. Of course, Steve has been working to replace the income tax system with something, a consumption tax of some time, even before the fair tax itself was hatched. So this is not just something that's out of the blue. This is something Steve's devoted many, many years to.
And most of his career beyond say the mid 80s, probably somewhere in that neighborhood. And the other thing too about this particular interview, it's concise. It's, it was under 15 minutes. It's something that's kind of review to get a right on the surface. This is for somebody who has never heard of the fair tax on consumption. This is a very good piece to get into. And the questions that were asked covered, how does it get collected? What happens to the Internal Revenue Service? Here are people who are now going to be coming into the payment of the taxes to the Treasury, simply because they are buying things at the cash register. And I think that I think that if you just are new or have not heard about, or you just stumbled upon, or you've heard about it in the news lately, that this particular interview and the person doing the questioning, was inquisitive enough to ask some good questions that scratch the surface of what the fair tax is all about.
Yeah, I was impressed that he was not adversarial or confrontational like some of the hosts that Steve has talked with in the past. But it was interesting. I liked that Steve addressed the 23 versus 30% thing, because again, that's another thing about the fair tax that folks have a hard time understanding sometimes, and that fair tax opponents will try to, well, the fair tax guys are saying it's a 23% tax, but it's actually a 30% tax, just depending on whether you express it as a percentage of the product price or a percentage of the entire amount that you spend, including the tax. But the first way it's 23%, second way it's 30%. But again, people have no problem whatsoever with an income tax rate in those ranges. But for some reason, folks will recoil in horror at the thought of a sales tax with that kind of rate on it. And I think they're afraid that a 30% sales tax is going to turn a $100 item on the shelf into a $130 item when you get it to the cash register. But that's not true. That's why we quote it as a 23% rate, because it's included in the price. Your $100 price tag includes $23 worth of tax. So you're paying $23 worth of tax on a $77 item, but the $23 tax is 23% of the total spent. And so that's how that goes. And Steve did a good job of explaining that. But I love the fact that he got into the concept of embedded taxes. If there's one thing that people do not understand about the income tax system, it's the effect of embedded taxes on the prices of everything we buy. You can look at your 1040 form and see, well, I paid X number of dollars in income tax. You can look at your pay stub and see, well, X number of dollars was withheld for Social Security and Medicare, those payroll taxes, but you do not see the other people's taxes that you are paying when you buy things. Like when you go get a haircut, what you pay for a haircut is taxable income to the barber, meaning that part of what you pay for a haircut ends up at the IRS as the barber's income tax, which means that your haircut costs you more because the barber has to pay tax on what he gets in. And that part is really sneaky, and that's and Steve hit it right on the head. That is one of the primary reasons that the DC establishment does not like the fair tax. They like being able to hide the true cost of government from those of us who are paying the true cost of government, and it looks like we're paying less than we actually are.
And that is the other side of the benefit of the fair tax as a tax on consumption. Competition is going to drive those embedded costs out of the cost of the goods that are purchased or the services that are engaged with. And those are the things that people say, well, it's going to be, like you said a minute ago, it's going to be 30% on top of. And of course, the one thing that's not said when a discussion on a news report about the fair tax as a tax on consumption versus the internal revenue in income tax is that the fair tax is going to be getting rid of, negating the Internal Revenue Service. Out of business, door's going to be locked. They'll lease the building out to some other department of government probably, but that's not talked about. And so you recoil. You used the word recoil a minute ago. People recoil when they hear 30%, but it's not on top of what you're already doing in terms of paying a tax to the Treasury through the income tax, because that all goes away. People will be able to get relief immediately in their paycheck, and then competition is going to drive the embedded costs out. Everybody's going to try that manufactures shoes, for example, or a shirt, or provides a service. Once that pool of expense is gone for them, that money will no longer be in their cost of providing you a good or a service or a hamburger or anything like that. It's just phenomenal. The increase in productivity in businesses, especially small businesses, is going to go through the roof. And those are the things that once you delve into the benefits of the fair tax, those are the things that you'll see.
Yeah, I'll tell you that again. We'll invite people to catch next week's FAIRtax Power Radio. That's one of the points that we're going to go into in a pretty good bit of detail when we're responding to this Fox Business article that was published a couple of weeks ago. We got about 3 minutes left. There were a couple other things that Steve said that are significant, and that is the state level fair tax efforts, specifically Alabama, Georgia, Nebraska, states that are going to get rid of their state income tax and replace it with a fair tax style consumption tax. And I got a feeling that, and I'm going to say when, not if, when the fair tax is adopted at the national level, any states that have an income tax of their own are probably going to get rid of it at that time.
Yeah, you're right. They'll see the writing on the wall that if they don't do it, then they're going to, because we see with North Carolina's declining income tax, state income tax is going down incrementally year after year after year right now.
Yeah, that's one of the things came up in the interview. They're trying to reduce it to 2.5%. And that was interesting when Alex asked Steve, "What do you think of that?" He says, "Well, that's better than you got now, but it's not as good as zero."
Yes, exactly. And that's the whole thing about the fair tax. Federal income tax goes to nothing. It doesn't, and the payroll tax goes too. And I think that's the benefit that a lot of folks don't think about when they're out there working, a regular job, either hourly or get a salary. At the end of the day, you get a stub that says gross amount. Here's the federal reduction. Here's the state. Here's payroll taxes, and then here's your net. And you don't feel it because, well, you just don't get it. If you had to pay, I guarantee you, as a worker, as somebody who gets a check every couple of weeks or once a month, or as a commission salesperson or whatever your job is, I guarantee that if you had to pay that to the federal government, if you had to pay your deductions 100%, this whole thing would be over by now. But since the business owner takes care of that for the government, then and we don't get the check. We don't get the check with the gross amount in it and have to write it out. And I think that's something that's important to point out about the fair tax and how it works. You're going to get an instant raise instantly, and the rebate on top of that.
Mm-hmm. All right. Well, I'll tell you, we got less than a minute to go. So again, let's extend our kudos to Alex Baltziger and the Carolina Journal for approaching Steve and having him on there to talk about the fair tax, and did so. And I thought of a very fair and very excellent way of doing that. So again, if you've got somebody that can appear on a talk show, so you can do that. You can call your local talk shows and talk about the fair tax. You can write letters to the editor and talk about the fair tax. We've got to be visible here because the vote in the House of Representatives is coming up. And if the Congress critters don't feel the pressure from back home to support the fair tax over the current income tax system, they're going to vote their own interests, which is to keep the income tax system. Well, we don't want that. So again, let's invite everybody to listen to FAIRtax Power Radio. Next week, we're going to really take apart an article that appeared in Fox Business, and hopefully we'll see you there. But until then, I'm Bob Paxton.
I'm Bob Scarborough.
We are the FAIRtax guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
you'll demand it.
So tell me, how could I pay less taxes?
Less.
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay focused and get ahead.
Exactly.